Hey, good afternoon, everybody. It is Friday, 10th of March. We are talking about some commodities, some currencies. As always, have to be aware of our risk. Past performance is not indicative of future performance. You have to be willing to accept risk in the financial markets, and please know what you're looking at before you do it. And with that, I'm going to get on and I am going to discuss a little gold here. So this is Mark talking about the peak daily trade model. And I've gotten a lot of interest with this peak model. And what this is a daily trade model that at end of business day calculates positions for the next day. And oftentimes it's in trades for several days. For some of the short-term traders, that may be too long-term for them. So what I want to show today is a long-term trade, a long-term viewpoint using shorter term techniques. And so first I'm going to reference the 1st of March. So this is 5 p.m. So it's the 6 p.m. open, the futures open, and I'm looking at gold here. This was the model signal to sell gold. So we can see right here it's highlighted in yellow, and this is what the model looks like. This is the output you get with the model. Gold spot close is 1248.80. The entry price was 1248.5. The stop loss was 1260. So that was the 1st of March. Just to give everybody a frame of reference, that's what we're looking at. Okay. So now I want to look at this exact spot, 1248.5 in the gold market at the open on the 1st of March. So that is your entry. That is your model entry. And again, stop loss would be up at 1260. So that would be your stop loss. Just for purposes of illustration here, I'm going to make this nice and clear. Stop loss in red up at 1260. So that's your entry. So it's the 10th of March, and we can see gold getting a little bit of a bounce today. But gold is down about $44 since that trade, and that was just a little over a week ago. So in one contract, $44 in gold's worth $4,400, isn't it? The lows today was $11.94. So that's $4,400. But to get that $4,400, you would have had to sell here and hold it. And the idea of holding overnight to some people is just not what they do. A lot of people are very short-term focused. Now, what I'm trying to show people is the ability to deal with a long-term, or let's say longer-term outlook, one of which gold going lower. That's the outlook. And so using the model, the trade model as your foundation, you're walking in every day with the bias of I would like to sell gold. So one of the things we do in talking about this on our weekly Monday presentations is to find these levels, right? So I just want to show you with this one trade, I want to show you short-term intraday type stuff and what we're looking for. And if some of this terminology is not immediately recognizable, this is what I teach in my Monday classes. So all my subscribers have the ability to come in and listen to me teach once a week on Mondays. But this is what I teach, this type of stuff. So I'm looking at what I call bottom edge, which is just simply a bottom of consolidation. And in shorter time, this is what I'm getting, 2-3 day bottom edge. Now we see what happens at bottom edge. This is where it's formed. It's really formed 27th of February, touches again. I'm just drawing here the level. We break through bottom edge. Now this is 48.5. This is where the model goes short. Now here's what I'm talking about with some of these shorter term mentality. All you're looking to do is sell top edge or on a break of what I'm going to call bottom edge, test back to that bottom edge. That's what we're doing. So as I said, holding this gold trade throughout the 9 days now has gold up about $44, $4,400 per one contract. So let's look at it on a shorter term basis and see what's there. So the first sell opportunity at top edge on the 1st of March comes in this zone. It's a very tight zone. This is perfect for a shorter term mentality, but it's a sell in the 1251 area. What we would target, especially as a short term, would be the first rotation back to this edge. And I'll get more into why this is the edge. But ultimately, this is the sell. A sell at 1251. This is the futures close, and then we would be opening the next night in Asia right here. But there's your rotation to 1240 what is this line? 1242. So that's a $900 gain from that rotation to this rotation. Now, some of you may be looking at this level and get it as well. But I don't have time in this short video to explain the edge versus the rejection of the edge. But here's the next component. So there is your $900 or roughly $900 off of that sell. Now the next thing I started to say beyond top edge sells is once price breaks through a bottom edge and then comes back and tests this same edge. So again, we're not selling here, not selling here. It's the tap back to this edge to then sell it another time. So now it's a sell at 1242.5. Do you follow what we're doing? This rotation takes us down to what forms another short-term bottom edge. What is that rotation? And we don't know it's a rotation here. It's only after hours that it starts to develop. But that's another $1,000 move. So follow with me. 900, 1,000, right? I mean, that's $1,900 so far. What would be the next place we'd be looking? Another top edge, if one formed in here. We don't get a top edge, do we? It doesn't give us a top edge test, doesn't. So the next place we could look is a break of bottom edge and a tap back to it. Do we get one? Yeah, right here. 8 a.m. on the 3rd of March, 8 a.m. That rotates down, what does that rotate? That rotates 700 US dollars, almost 800 US dollars before it inevitably goes back up for a small test. Where does that test hold? Do you remember before when I talked about top edge? Where's this test coming? I mean, could it go any closer to top edge? A sell at 1236? And then where does it play? It literally plays level to level with this area that was defined on the 2nd of March. But it allows you for another top edge sell, 1236. Where does 1236 rotate? We would be targeting this bottom edge area around 1225. So that would be an $1,100 move. If we could get a rotation from here to here, that's $1,100. There's your rotation. So now you have 900, 1,000, 800, and $1,100. Do you see where I'm going with this? The idea is you're not walking in looking at the gold market saying, which way should I trade? You're walking in with a game plan. You're walking in with a model behind you, a longer term model. You're walking in saying, my job is to get short gold. Where do I get short gold? I get short gold on rallies. I know what my risk is. I know what my risk is. If I want to be a shorter term trader, all I have to do for less risk, meaning price risk, is allow for rotations above the last top or bottom edge. That's all I have to allow for. And once I build that into my trade plan, I'm all set. But we have to accept the risk. But there are ways to use that longer term analysis and use it in your favor, aren't there? You guys want more? What happens at bottom edge? Do we rotate? No, we don't rotate. It now starts to create a lower top edge, right? Aggressive, but you could sell against it. Aggressive. I like the idea more in this, the look of the breakthrough and tap back to it, which gets you short at 1225 on the 7th of March. Look at this move from the 7th. That's another $1,000 move. So where are you looking? You're looking on top edges and bottom edge breaks. And that's the idea. So I hope I've shown you what the abilities of the short term are in a trending market with the long term model. And that's really the beauty, the benefit. If you have any questions, would like more information on the model, like to subscribe and get in before the Monday class, go ahead and contact us. But hope you've enjoyed it and understand what we're doing here. Looking for top edge sells, looking for breaks of bottom edges, and looking to keep the risk contained. That's what we're doing, managing the risk. So for Mark, and I hope you guys have a wonderful weekend. Cheers, and we'll hopefully see you soon.